Hi, I'm Robert Giustra. I'm the CEO and Chairman of Columbus Gold. And if you've tuned in today, it's because you're a gold investor or a prospective gold investor. And you've come to the right place. You've come to the right place for two reasons. One, your timing is impeccable. And two, as you're about to learn, Columbus Gold is no ordinary gold company. Let's start with French Guiana. Why French Guiana? Politically, French Guiana is part of France. That comes with stability. It comes with security of ownership. It comes with low corruption levels. So politically, we like French Guiana because it's stable, but we also like it because geologically, it's very prospective for gold. Millions of years ago when the continents were joined, South America and Africa were one. West Africa has 100 years of exploration history and as a result, dozens and dozens of world-class gold discoveries. On the other hand, in South America, particularly in French Guiana, there's a very short exploration history. And in that very short period of time, about 25 years, all the deposits you see on the map behind me were discovered. One of those deposits is called Paul Isnard. That deposit is 4 million ounces, and it's Columbus Gold's principal asset. Now, before we talk about Paul Isnard, let's talk about infrastructure and access. If you know anything about this part of the world, you know that generally access is horrific. Well, Paul Isnard is an exception. From the capital city of Cayenne to the port of Saint Laurent, there's a paved highway. From the main port of Saint Laurent to the project area, it's 115 kilometers on an all-force road. So access for this part of the world is exceptional, and that can't be underestimated. Now, I referred earlier to a 4 million ounce deposit, but the deposit is going to get much larger. We're presently drilling a 27,000 meter drill program. Practically every single hole has been successful in defining additional gold mineralization. So I get this question a lot. It's already 4 million ounces. Is the deposit going to get any bigger? Well, yes, it will, and this is how. Refer to the map behind me. You'll see that there's potential along strike, and by strike we mean lengthwise, and it's in the following way. Look at the geochem. It continues east and west. This is the gold surface expression. It continues east and west for several kilometers. Look at the geophysics. It continues east and west for several kilometers. And look at the geology. It also continues east and west for several kilometers. Now, you should be excited if you have only one of these elements. In Columbus Gold's case, Paul Isnard demonstrates all three major elements, clearly indicating that the deposit has the potential to grow lengthwise along strike. When you put all three of these together, look what happens. These types of deposits we call greenstone deposits. They're known to go to the center of the earth. It becomes a commercial decision. How deep do I want to drill it? How deep do I want to mine it? Clearly, the indication is that Paul Isnard continues at depth. The deposit's also going to grow in between widely spaced holes. Again, refer to the map. Look at those gaps. Those are all undrilled gaps within the deposit. Finally, the deposit can grow in parallel zones, where the indication suggests expansion potential. So why is this important as an investor? It's important because this drilling is occurring as we speak. There are presently 3 drills turning, and we're expecting to announce a larger resource and a higher level of confidence in the next several months. We expect the deposit to grow substantially. We expect the confidence level to be raised from the inferred category, and accordingly, we expect our valuation to rise with it. But we're not just drilling. In parallel with the drilling, we're completing baseline environmental studies. We're completing metallurgical studies. We're spending $30 million with a clear objective of completing a bankable feasibility study, and by the end of the first quarter of 2015, a preliminary economic assessment. Now here's the best part. We're not spending our money. All the work is being funded by our joint venture partner, Nordgold. Who's Nordgold? Let's have a look. They're the 13th largest gold company in the world. They're the fastest growing gold company in the world. In 2006, they didn't exist. And in 8 short years, They now have 9 operating gold mines in 4 countries. Last year, they had $1.3 billion in revenue and they produced 924,000 ounces. Very impressive. But the deal gets better. The work's being funded by Nordgold, but we're the operators. 10% of all the money spent is paid to Columbus Gold to act as the operator on the project. This covers all of our overheads. In addition, for funding $30 million in work, completing a bankable feasibility study, all they get is 50.01% of the project. In the case of our agreement with Nordgold, they have no further rights after 50.01%. That means in less than 3 years, Columbus Gold may own about half of a major gold deposit already known to host 4 million ounces of gold, confirmed to be getting larger as you've seen from the previous discussion. And we have the option of going to the bank, obtaining the financing to put that mine into production ourselves. Or we can elect for Nordgold to build the mine. So let's look at the dilution formula on the table here behind me. If Nordgold builds a $400 million mine and it's 4.5 million ounces of gold, Nordgold can dilute us down to only 20%. That means Nordgold spends all the money. We do absolutely nothing, and we have 20% of a producing gold mine, a major producing gold mine. To dilute us below 10%, Nordgold would have to spend over $1 billion. Allow me to reiterate. We have a major gold deposit getting larger. Nordgold is funding all of the work. We can elect to participate in mine construction and keep about a 50% interest, or we can elect for Nordgold to build the mine and get diluted. Let's talk about Nevada. Now, Nevada needs no introduction if you're in the gold mining industry. It's simply the most prolific gold producing area in the world, bar none. It is by far the biggest producer of gold per square mile in the world. It possesses all the infrastructure one would need for gold mining, and it's one of the most favorable mining jurisdictions. Now, what you don't know is that all of that started because of one individual named John Livermore. In the 1960s, John Livermore discovered the Carlin Mine, which set off a wave of gold exploration that resulted in many more discoveries, making Nevada what it is today in the gold mining industry. So why are we in Nevada? We're in Nevada because of the expertise of our exploration team. After the Carlin discovery, over the next 35 years, John Livermore, with Andy Wallace, our company director, discovered another 8 economic gold mines. Our business plan in Nevada is very straightforward. It had one objective in mind: make another economic discovery. In 2013, we announced a discovery at our Eastside project. If you're going to find a gold mine, this is the dream location to find a gold mine. We're 20 miles from the mining town of Tonopah. The project is 6 miles from the paved highway that goes from Reno to Las Vegas. There's water on site. There's different types of mineralization. Some mineralization it's easier to extract gold from. Other rocks it's harder to extract gold from. If you're operating in this part of the world, you want oxide gold mineralization. The Eastside project is an oxide gold occurrence. Take a look at those drill results. Those are typical Nevada gold grades. So where do we go from here? We've set out a $10 million, 250-hole drill program set to commence in the coming weeks to fully define a deposit over at the Eastside project, with the objective of announcing a resource estimate by the end of 2015. That project is fully funded. Now remember, Paul Isnard is fully funded by Nordgold. Eastside is fully funded by us. We are keeping a 100% interest in Eastside with no plans to bring in a partner. Eastside is what everybody in the gold business is looking for.
We've come up with a new virgin discovery 20 miles from Tonopah in one of the most heavily prospected areas in Nevada. I never thought I would find anything that the old timers hadn't found. This isn't a Carlin type deposit. I mean, it's associated with quartz, but we're getting samples that would have been very interested in 1900. You can get surface samples 8, 9, 10 grams, but they weren't found.
So what's next? What are the milestones for 2015? 1, resource estimate at Paul Isnard, where we think there's going to be a significant increase in the 4 million ounce resource presently defined. There's going to be a PEA, preliminary economic assessment, by the end of the first quarter in 2015. There's going to be a slew of drill results coming from both projects, Eastside and Paul Isnard, with a very ambitious program at Eastside and a resource estimate at Eastside. So what does that mean for the share price? We're definitely undervalued by almost any measure, any comparable, but what you really should be asking yourself is, where do you want to be when the bull market for gold stocks comes back? I think it's very clear you want to be with a company with ounces in the ground, 4 million ounces and getting larger, and an important new discovery in the best mining jurisdiction in the world, Nevada. Thanks for tuning in today. Appreciate your time.